I can start with the daily time frame here to understand what kind of price movement range I can be looking at. And I subtract the high from the low, and I end up with 32.25. So let's do that. Let's put that on here. So 32.25. I know today's upper end of price movement range has been broken, which is only about 21. But when I go to the second level that I would consider, 32 is in play. So I know I'm in that, for the week, exhaustive area. And again, we have the day's probability at 68%, and we have the week's probability of 68%. We're up at the week. Okay, so there's a certain exhaustive expectation I have. Next is looking at the trend. While I do have a nice string of red grab candles and a nice angle here of the wave heading down at 4 to 6, this hasn't been doing it for very long. I have noted some of these lower highs. That's nice. But I don't have propulsion dots. That would have really helped solidify my opinion, but we don't have it. And the one thing that every trend does need to be a more convincing trend is time. You can't rush that along. But the sea of red, a fresh angle of the wave, I'm more bearish than I was for some time. So I have a bearishness, and I'm moving in terms of already exhausting kind of this 32-point fuel in the tank. So it's a pretty good idea that we could be exhausting up in this area. So now we are 50 minutes from the Wall Street bell, 5-0. I circle back to that 60-minute time frame, and maybe even that 5. I can see a little Darvis containment there. We'll take a look at that as well. I go back and I find all the objective levels. In fact, we've got wave levels that have drawn every one of those red lines. I'm using previous Darvis levels to draw every one of these. Every one of these has a previous Darvis level. Now, I painted this one green because at the time we were trading just above it. And I still think it's a pretty good catalyst for maybe a breakdown. Every one of those 60-minute candle bodies seems to be interacting with the 2660.5 area, which was a previous Darvis area, Darvis level. So I have this overbought, exhaustive, ceiling, weakness zone up here. So my overall psychology on the daily is pointing to the downside. My overall psychology on the 60-minute is pointing to chop, and therefore this is overbought. And then I could put an indicator like a ready, aim, fire, or a slow stochastic on this. I'm going to put the ready, aim, fire on here. So I'm looking to see, are we sitting at an overbought level, and what does the ready, aim, fire have to say about it? So I'll throw that on there. So we're stacking tools as we understand what the different price movement range, market trends, time of day are all impacting. So I think we're pretty close. An alternative to the ready, aim, fire would be a 21-3 slow stochastic. Okay, now we have another layer we can look at, and that is the currency view. What is the one-day relative performance? My yen is up 0.9. It is very tough for me to want to be a bull in an environment where this yen is this strong. And gang, it's been strong all day long. Morning, midday, going into the close, this thing has been strong. It's hard to want a bet, to make a bullish bet on stocks when I see not just the yen, but the franc hanging out here too. Yen and franc strength, generally speaking, is considered risk averse. Risk averse there. So you put all that together, and there's two setups we can look at into the close. One could be the exhaustive short on the 60. The other one is what could be a Darvis breakdown on the 5. The only problem with the 5-minute Darvis breakdown is this trend hasn't been moving up for very, very long. And midday we had a lot of chop. But, you know, you could actually look at a breakdown through this lower end of the box and through the bottom line of the wave. And then ideally what we want to see here, and this is just another strategy that I use, this is the CCI confirmed commodity channel index on a 20 period. This is just a CCI confirmed intraday trend break. So I've broken down all the different components that I would look at to set up this market. I'm not necessarily starting off with, oh, I want to short this. I'm letting the daily, I'm letting the yen, I'm letting the exhaustion of the daily price movement range. So the daily trend, the yen strength, the daily price movement range exhaustion, the overbought 60, I'm letting all these things sort of point in the direction we're looking at. And that's what I'm going to be looking at going into the close.